Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Thursday, January 30th, 5:30 p.m. Eastern Time. Coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. I will be appearing on IBD Live tomorrow morning. That starts around 9:20 Eastern Time through 11 o'clock. Always happy to be on that show with a great bunch of folks. Be sure and tune in if you get the opportunity. If not, it is recorded. If you have the IBD Live subscription, you can watch it afterwards. So, state of the market, we're in an uptrend. Check the trend gauge over here after the whooping that was put on AI data center themed names on Monday, causing us to have to rebuild the 21 over 21 list. We still keep that on neutral, although I'm pretty impressed in the with the bounce back of some of these names. I believe it's tied to one. It was overdone, as I mentioned in Monday's video, but also some of these AI data center type names have reported earnings and business as usual continued growth there. So those stocks are bouncing back, and we dipped our toe in with two of them today. And as far as the time frames that we invest over, we've got the three green arrows. Medium term, small cap index poked its head above the 50-day moving average today, but couldn't quite close above there as we had a late dump on some Trump tariff threats. But that's the only fly in the ointment as far as the major indexes against their short-term 21-day, medium-term 50-day, and long-term 200-day moving averages. And we also had a nice day today by leading stocks. So what happened today? FOMC, day one after that, very often you look to the Thursday after the FOMC meeting as the institutions get a chance to parse the words of Jerome Powell and see how it fits into their financial models and make their decision. And that started with a gap up in the morning and a little bit of follow through to the upside. Nothing's ever easy, though. We sold off two waves down, but then trended up in the afternoon, making highs of the day. And then around 3:30, uh, Trump talked about 25% tariffs because they're not stopping fentanyl at the borders of Canada and Mexico. And the market initially dived about 0.75% on that before recovering some of that. But it was kind of a volatile, choppy market, and you'll get more of these out of the blue fades and pops depending on the way the market parses the words of the president as they come out. But here are the final numbers. 21 over 21 list, good day. 18 up, 3 down, up an average of 1.5%. The big eight held back by Microsoft. Bad reaction to earnings, down 6.2%. Also, ServiceNow, which is a big software stock, down 11.4%, and that took a hit to that IGV software index that had a nice outperformance starting on Monday and following through on Tuesday and Wednesday, but taking a step back there today. The RG8, our 8 growth ETF composite, had a great day, up an average of 1.6%. S&P 500 ended up 0.5% after all the volatility, but check this out, the equal weight up double that. And that's good to see. That's a breadth indicator, and it means money's not coming out of the market if the RSP is holding up or showing relative strength. We'll take a look at the rest of the indexes here shortly, but mid and small led today. Global 60/40 up 0.5%. Our flagship GROTECTION portfolio up 0.78%. Let's go to the indexes, and we'll start with the S&P 500. Go to a 5-minute chart so you can see the volatility that I was talking about. So there's the initial gap up and past the highs of Tuesday before fading hard in the morning, bouncing, pulling back. And then here's a nice trend up. You can see tight bars. This is just accumulation. And then the big dump after at 3:40 p.m. on the tariff threat before bouncing, recovering about 3/4 of that into the close. So where does that leave us? It leaves us with an undercut and reclaim of the 8-day above the 21-day which is the green line, has now cut back up through the 50-day moving average. So we've got bullish configuration on the ultra short term, medium term, and long term moving averages. That's what we want to see. And the lows of Monday remain a key level to hold, because if we break down to there, we'll be breaking the 21 and the 50-day moving average, and that would probably represent us getting. I don't mean probably. It will definitely mean we get a bit more defensive. But right now, we're getting some benefit after hours from Apple's earnings. They were initially down, but now they're up about 3%. Must be some good news going on in the conference call. So there's your S&P 500, NASDAQ 100, undercut and reclaim of the 21 today on that shakeout, but holding the 50-day moving average. This is not showing relative strength going back to December against the S&P 500, however. But that's countered by the breadth of money flowing into the RSP equal weighted big cap index. The Dow Jones Industrial Average is the leading index year to date. You can see how nice that looks. No complaints there. On to mid caps, which had a nice day today. S&P 400 bounced off the 8-day moving average after a pretty gentle pullback. 5 of the last 6 days, just bouncing at the 21 and the 50-day moving average. That looks fine there. Let's go to the Russell 2000. Trying to get above that 50-day moving average. As I said, poked its head above it. When it did, we took a starter position in TNA, which is the small cap index. Our theory behind this is that if the market sees Jerome Powell's comments as interest rates are going to moderate, not necessarily rise, and the economic data continues to be supportive of cuts longer term, that this could break above this 2-week shelf that it's been forming here. So we'll be looking to add to that position if it can break above today's high. Let's look at the equal weight S&P 500 finally, and you can see breaking above this tight range that it had formed for the prior 7 days. So good stuff there. And note the relative strength of the equal weight, again, going back to December, and just the opposite of what you're seeing with the NASDAQ 100. Let's go to the VIX and start our inter-asset correlation. The VIX back below 16, the way we want to see it, pulling back today. How about the US dollar? Dollar with a pop today, coming off of the lows, ending at the top of the range, but still continuing its pullback, but being supported around this 50-day moving average. Where we did see a move today is with gold breaking above this flat base, up 1.51%. We own GLD, or PHYS for smaller accounts. GDX with a nice move, up 4%. We own Nugget, which was up 8%. That's a 2 times GDX, and a little break above this recent shelf. Silver also broke above this recent shelf. And Bitcoin faded a bit in the afternoon, but it's just in this nice tight 2-week consolidation here. How about bonds? Broad bond index BND, tight range today, just barely up. The long bond also just barely up. That means yields down a wee bit. You can see there the 30-year yield and the 10-year yield. All right, that's our inter-asset correlation. Let's go to tail of the tape. News, as I mentioned, threatened tariffs. The keys coming into today, the S&P trapped between 6,000 and 6,100, and we're still trapped between 6,000 and 6,100. NASDAQ 100 testing, but holding its 50-day moving average. Russell 2000 poked its head above, but could not get or stay above the 50-day moving average. And yeah, day 3 of the AI data center names bouncing. We're really in an 8-day consolidation now after breaking above 6,000. So we'll be keeping an eye again on that 6,000, 6,100 level tomorrow. 3 days above the 8 EMA, 11 days above the 21 EMA. Expectations positive as long as we maintain those levels. I didn't fill out the sectors that were strong today, but 11 out of 11 of the spider sectors were positive as we do some live editing here. And on the downside, what was weak? Well, XOP producers and software, mainly IGV, as I mentioned, because of the pullbacks in Microsoft and ServiceNow. Portfolio, two buys, CEG and GEV. Those are infrastructure plays. We'll take a look at those charts. We added to Snow on a gentle pullback to the 8 EMA and the 60-minute stochastic cross. We use that a lot for pullback buying. And Tesla's early strength faded. Initially trimmed half of that position, maybe adding it back after it showed some strength in the afternoon. So this puts our numbers at 1.30 for adjusted beta, and to the downside, negative 5.37. And we are working on some mathematical adjustments to this to account for kind of what we saw Monday, which was a gap down through our stops. That threw off the expectation of this number here. So we're going to be doing some lab work on determining what the best way to handle that is. So bottom line for the day, after FOMC and tech earnings, market was up despite the volatile chop and the late tariff dump, Trump dump on the news, on that news. Friday's keys, same as today. 6,000, 6,100, 50-day on the NASDAQ. Russell 2000, can it blow through the 50-day? And will we see day 4 of the AI data center name bounce? Let's get to some charts and let's start off with the buys that we did today. So CEG, Constellation Energy, you can see it had the big drop on Monday, followed through to the downside early, but bounced at the 50-day moving average on Tuesday. Further strength got it back above the 21. This is one of the few that was able to regain the 21 on Wednesday and followed further to the upside today. So, yeah, we don't like to buy on 3 days up, but we get a reasonable trading level against the 21-day moving average here. So, watching all these names bounce, maybe it was just a complete 1 day blunder to the downside, but we do obey our stops and we did take a hit on Monday, but we're going to get back on the horse immediately. In fact, we never got off the horse. That's what we do as technicians. And stepping back in on that, that's an AI data center alternative energy play. GEV, GE Vernova, broke the 50-day on its gap down, made reclaimed the 50-day moving average on Tuesday. A little bit of a shake on Wednesday and reclaimed the 21 today. So again, a nice level to trade against with the 8 and the 21 in today's lows. So we stepped back into that. Let's look at Snow. Added to this today, as I said on that, let me show you what the setup is on the 60-minute stochastic. We use this frequently. So basically, it's a gentle pullback and then a turn back up from oversold on a 60-minute stochastic. And it's best when it coincides with a moving average undercut and reclaim. And that's exactly what we saw today. Also, 2 days of a lower volume pullback versus Monday and Tuesday's action. And this was really not affected by the AI data center, although it is an AI software company. So followed, powered up to the highs of the cut base on Tuesday. That's when we first started the entry, and then on this gentle pullback, added a little bit there. Tesla, I talked about how we cut it. Let's take a look at the 5-minute chart here. My initial thought was we were going to be adding to this on the gap up, but it immediately sold off hard. Maybe should have been a little bit more patient with this undercut of the 385, but they pretty much dislodged half my shares at the bottom there before bouncing nicely throughout the morning, putting in a cup in the afternoon. If we can hold here and break above the highs of the range on the earnings day. They missed earnings, top and bottom line, but there's a lot of optimism about their humanoid robots and robotaxi. So break back above the moving averages with authority and back up through today's highs may be a possible add there. Let's take a look at the rest of the holdings in the portfolio. And we'll go. We showed gold, nugget, and IBIT. we show, which is Bitcoin. Here's Bros. It's our largest holding, still only a half a size though. Bounced at the 21 on Monday, powering through to higher highs on higher volume the last 2 days. This looks fantastic. Reddit, that's about a half size actually. Reddit pulled back after eclipsing the 200 level yesterday. ON down a little bit after hours because DEC is down 16% after it reported earnings. So it needs to hold the pivot tomorrow. Has been acting very nice, and it was a nice breakout above that flat base. So we'll be keeping an eye on that tomorrow. Hood has continued to power higher since we bought it on this undercut and reclaim of the 8 day moving average earlier this week. Snowflake, mentioned that at the 8 EMA. Palantir acting great near the top of the range. See how this gap down on that AI data center? They're obviously an AI company, but it held the 21 and then had a very strong day on Tuesday, continuing higher Wednesday, and Thursday. And I showed CEG and GEV, and that is the portfolio. And I'll wrap it. As always, like to hear from you. Emails don@revereasset.com if you're interested in becoming a client. You can call 855 Real Wealth. That's 855-732-5932, or email my partner Dan Stewart. He will get the process kicked off to bring you on board. His email is dan@revereasset.com. Our flagship portfolio named GROTECTION is designed to participate in market uptrends and lighten up when things get a little choppy, re-engage if they go higher. But if things break lower the way they did in 2022, we're going to get the heck out of the way of this nonsense because we've studied bear markets. We know how they behave. And if you get below the 200-day moving average and the 200-day rolls over, you could be in for a load of hurt. And the time to bring your assets to Revere is now, when you're near highs on your account, because your pie chart advisor, if they do not have a sell discipline, and very few of them do, next bear market, you will ride this down and they will tell you to think long term, which is great if you're an oak tree, not so great if you're approaching retirement. We also have a new portfolio named TurboTection with the same rules of GROTECTION, but a little bit more aggressive on position sizing. If you're interested in that, reach out to us. And with that, I'll wrap it for Thursday, January 30th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.